Good evening, everyone, and welcome to this session, Growing Your Business with Capital. My name is Christine Buckley. I'm the Director of the Loan Readiness Department at Business Impact Northwest, and I'm joined tonight by Erin McDonald of BECU, who will speak about their lending products. If you're looking for a different session or topic, you can use the track buttons below to navigate throughout the event. We will also be sure to include time for questions and answers at the end. And you can click on the questions tab below the video player to submit your questions. And you can also use the chat on the right side of the page to engage with the session. A little bit about Business Impact Northwest. Business Impact Northwest is a small business service organization. We are a CDFI, or Community Development Financial Institution, and we've been in the area since 1997, serving Washington, Oregon, Idaho, and Alaska. Our mission is to grow businesses that create jobs in underserved communities, and that includes women-owned businesses, veterans, communities of color, LGBTQ+, immigrants, and rural businesses. We do that through coaching, classes, and capital. So a little bit about small business growth. Some of you may be in different stages of growth. Some of you may be growing from entrepreneurship into a startup business. Other of you have been in business for a while. So the first question to ask yourselves when you're thinking about outside funding for your business growth, is it the right time and environment to grow? And why? So you want to ask yourself, what is happening in your industry, in your specific industry? And these last years have been tough for some industries through the pandemic. Maybe your business has actually thrived throughout that. Some businesses have actually been able to do that. So you really want to look deeply into what's happening in your industry. Also, you want to look at your demand. So what are your customers saying about your products and services? Are they asking you to expand? Are they asking you for new products? And also, you want to see what the condition of your cash flow is as well. Do you have a solid brand identity? So what is your brand in your industry, in the market that you're operating in? Is it solid? And what is it like in comparison to your other competitors? And also, you want to analyze your current operations and financial statements. So do you have systems in place for your finances? Do you have systems in place for your production, your marketing, and your sales? And you'll also want to have a well thought out plan and strategy. And this includes specific goals and metrics that you can work towards. And those could be a plan going forward for the next 6 months. It could be for the next year, or perhaps maybe going out into 2 to 3 years. Now, you may have already done some of this analysis, or perhaps you need to do that. And you may, through this analysis, determine that you do need some outside funding to really fuel that growth that you're looking to do. Some things you'll want to keep in mind as far as qualifying for a commercial loan is, if that's the type of funding that you've determined that you need, is to first be able to demonstrate your need and purpose. Know your risk factors and show that you are a good risk. Have documents ready to support your application, and know what the lender looks at and needs. And this may be a conversation with the particular lender that you're looking to apply with. So your need, purpose, and use. You'll really want to think about what benefits will this loan provide to your business success, to that growth, and meeting those business goals. What types of resources, assets, or cash do you have already, and do you need to do that? That may be coming from already from your retained earnings or your cash flow, your profits. But you may determine that that's not going to be enough, or you don't want to spend all of your reserves or all of your cash on this next project. And so you'll need to determine how much of that funding needs will need to come from a commercial loan. You'll need to determine what you need as in the form of capital. So that means equipment, people, maybe you need to get some efficiencies in place in your processes. So you may have a lack of labor. For example, perhaps you need to fulfill a new order and you don't have the staff to do that. Perhaps you need to buy some equipment as well to do that. Maybe you're a food truck right now and your customers are telling you that they'd love to have you open up a restaurant in their neighborhood. Do you have the resources or the capital, the asset to do that? You may need to lease a place, perhaps purchase a brick and mortar. You'll need equipment, furniture, maybe do some leasehold improvements. Do you have the capital to take on larger projects? Now, this is usually for businesses that have to purchase labor, materials before they can implement that project and they get paid later. So, this could be construction businesses, remodeling businesses, even production businesses. And what is the time frame that you will get paid? So again, with construction or remodeling businesses, they often have to spend money first and they won't get paid until the project is complete. Or maybe you wholesale and you have to deliver products and then you don't get paid until 30, maybe 60 days out. So you want to know the time frame of that. Also, you want to discuss with your management what are your long term goals and what is your operating cycle. So perhaps you're a seasonal business and you have some ups and downs. Again, maybe you have a production cycle that requires expenses before you get revenue. Risk factors are something that are very important to lenders. So, your ability to repay a loan is a lender's main concern. So, they're going to be looking at certain factors, certain risk factors that you as a business owner have. And one of them would be is, do you pay back your loans? Have you done this in the past? Have you been successful or have a good cause that you will be in the future, especially if you're a startup? How are you going to generate the cash to pay back the loan? So, is that going to come from increased revenues that the loan assets create? Is this going to come from your existing revenues? Is your industry growing or is it in decline? Is there demand for your products and or services, and how much demand? Can you quantify that? And do you have assets to back up the loan? So do you have property that can be liquidated to back up the loan in case the applicant or borrower defaults? A lot of lenders are going to determine your risk factors based on the 5 C's of credit. Many of you have probably heard of the 5 C's of credit. They are character, capacity, capital, collateral, and conditions. And character is really based on your past performance, your ability, your character when it comes to managing your money and loans. How do you pay back loans? Capacity is the ability of you and your business to generate the funds to pay back that loan, and that comes from your profit levels. And then capital. Capital is what you put into the project that you're wanting to fund. So you're going to have to put a little bit of your money, or what they call skin in the game. Collateral is an asset that you pledge to back up your loan, again, in case you default on this loan. And conditions. Finally, this is an analysis of the conditions of the market or the environment that your business is operating in. So a little bit more about character. This is shown in your credit score. And the lender is going to be looking at your personal credit score. And these are monitored by 3 credit bureaus, TransUnion, Equifax, and Experian. And their scores are typically from 0 to 800, with a good average around 690 to 719. Just a word about credit scores. Now, you may be pulling your credit score for free, maybe from your bank. Maybe your bank offers that. Maybe you get it from Credit Karma. Now, you want to keep in mind that those are ballparks. Your lender is going to actually pull an official credit score from one of those 3 bureaus. So you may get your credit score from one of these third-party um, uh, vendors, and you may get it from your lender, and they may be different. Business credit scores are monitored by Equifax Business, Experian Business, and Dun & Bradstreet, and it has a different rating scale from 0 to 100. Normally, that is used only by vendors and suppliers. Um, as far as credit scores and character go, credit score is a reflection of things that are on your credit report. This includes your payment history. Do you pay on time? Do you have any delinquencies, charge-offs, bankruptcies? The length and type of credit. So lender's going to see if you have a mix of different types of credit, such as mortgage, car loan, student loans, credit cards, and also the number of inquiries and how recent. If you, before you apply for a commercial loan, you have also been applying to many other lenders recently, it may indicate that you are in a cash flow crunch or crisis. Understanding collateral. Basically, collateral, those are assets such as equipment, buildings, accounts receivables, sometimes inventory, and it's considered possible sources of repayment if they can be sold by the bank for cash. Usually the last thing a lender wants to do, but it does reduce the risk for the lender if they have some collateral as backup. How much collateral might you need? It depends on your risk factors. So it depends on the loan size, your credit score, type of loan, type of collateral, loan to value ratio, but expect a 1-to-1 ratio or more. So if your credit score is on the lower side, that is increasing your risk as a borrower. You may need to put down more collateral. How much capital or a down payment might you need? Now, again, expect to put some money of your own towards the project that you're needing to fund. It's very rare that there are 100% financed loans, so just keep that in mind. Again, it depends on the lender. Some lenders will go down as low as 10% of the project cost as a down payment, some around 25. Again, you'll want to check with your lender. It depends on the loan size, of course. So if you are asking for a loan of, or your project is 100,000, you may need to put down, 20%. So that would be $20,000. Your capacity. Now, the first place a lender is going to look to see about your capacity is in your business financials. So this is a demonstration of enough revenue to support your operations and debts, current debts, and then the added debt that you're applying for. And this is going to be shown on your balance sheet, your income statements, and typically they'll probably want, 3 to 5 years is typical. Tax returns, and if you are a startup or haven't been generating revenues, they'll probably want to see a cash flow projections that's going to demonstrate your capacity. Capacity now and conditions are shown in a business plan, and business plans are usually needed for startup businesses. You may be asked to if you are in business, to provide a business plan. If you're adding something new, doing another activity. And this is really a narrative of what's in your financials. It's describing what you've put into your financials in the form of assumptions, but it's also going to include things that are not in your financials, such as the market and industry conditions, management capabilities. That's a really important thing to lenders, that you have the know-how to run this business, you have the experience. Marketing and sales plan, again, how are you going to generate the revenue to pay back the loan? And your risk mitigation plan. Your loan proposal. Now, when you apply for a loan, often when you apply now, most lenders have an online portal, so you can actually fill out a loan application online. But then after you do that, they're going to ask for business information. They're going to ask for some financial information. But then once you are connected to the lender and a loan officer, they're going to continue the process, and they're going to ask you some specific questions. They're going to want to know what the purpose of your loan is. Is it to grow? Is it maybe to refinance a higher loan? They want to know the loan amount request. So exactly how much amount of a loan do you need? What type of loan are you thinking about? You may or may not have the answer to that question. You may have heard of different type of loan products and you're not sure of which one would be best for you. The loan officer will discuss that with you and will help you determine the best one for you and your situation. You will also want to have in mind what length of repayment that you want and that you can fulfill. Usually, a smaller loan will be a smaller repayment period. A larger loan, such as for a commercial property, will be a longer term. The lender will also want to know what your specific use of your loan funds are. Is it for equipment? How much for that equipment? Is it for working capital? Is it to refinance a higher loan? Is it to buy a property? So they'll want to know that. It's part of the reason they do want to know that is any of that cannot be used as collateral. They'll also want to look a little bit into your bank accounts, retirement accounts. They'll look into the personal income of the business owners, those that own 20% or more of the business. Just a few words about the SBA Guaranteed Loan Program. Some of you may have heard about this. The SBA does not lend money in this program. It guarantees the loan to the lender. And so it operates through approved private sector lenders. And these are for small businesses that are not able to obtain credit elsewhere. And the reason is because the SBA Guaranteed Loan Program mitigates the lender's perceived risk because the SBA guarantees a percentage of the loan amount back to the lender in case of default. It still requires the 5 C's of credit and underwriting, and it can be used for almost any legitimate business purpose. You can find more information about the SBA loan products at sba.gov. And there's more information about the different type of products, the 504, the 7A, express loans, microloans. Also, if you are looking for a lender that has SBA products, you can go to the sba.gov website and look for their lender match. And you just enter your information and your location, and they will match you with a lender. Here at Business Impact Northwest, we have the Loan Readiness Center, and we provide assistance to small business owners and entrepreneurs that are looking to get ready and apply for commercial lending. And we do that through credit counseling. So if you happen to pull your credit score, your credit report, and you find that it's not, up to par, or it's not in the range that would qualify you for a loan, we can help you with those issues. We can give you a little bit of advice on types of financing and products, and that includes financing that may not be a commercial loan. We can help you with your financial statements. A lot of small business owners, they do have a CPA, they do have an accountant, but they're not really familiar with their financial statements. They may not even get a copy of them from the accountant. I do advise you to do that, but we can help you with that. So we can also review your business plan and projections and your loan proposal before you submit it. And we can also help you understand your financial statements. So if you're not sure what a balance statement is or does, or an income statement or a cash flow statement, or how they relate together, what information they're giving you as as a business owner, or what things on those documents a lender's going to be looking at, we can also review that with you. And we can give you assistance with underwriting requirements. All right, I'm going to hand this over now to Erin McDonald. Thank you.
Thank you, Christine. Good evening, everyone. My name is Aaron McDonald. I am the Director of Commercial Portfolio Management here at BECU. I'm very excited to be able to present to you tonight during this breakout session, How to Grow Your Business. I'm going to provide a high-level summary of a variety of different business lending options BECU has available to our members. If I can get this slide to advance. There we go. Thank you. Sorry. I'm going to start with the business visa. The business visa has a low APR, no annual fee, no foreign transaction fees, auto rental collision damage waiver, and you can set up employee spending cards with individual spending limits. The business visa with cash rewards card has all the same benefits of the business visa, plus a 1.5% unlimited cash back on all purchases. Again, with the cash rewards card, just like the business visa, no annual fee. The business visa is a solution that provides businesses a safe and convenient way to make everyday purchases. Some examples could be office supplies or travel and entertainment expenses. The next lending option I'll discuss is a line of credit. For lines of credit, BECU offers low competitive variable rates. We have both secured lines of credit and unsecured lines of credit as options for you. And your lines of credit could serve as overdraft protection on your BECU deposit accounts. Lines of credit typically provide short-term advances to fund business expenses. Lines of credit can be available for some qualifying borrowers at dollar amounts much larger than a typical credit card spending limit might be. Lines of credit are often used for making larger purchases, such as inventory purchases for maybe a manufacturing business, or you can use it as a tool to manage your payroll. For example, you may have a weekly or bi-weekly payroll, but only collect from your customers every 30 or 60 days. A line of credit offers a short-term borrowing solution to bridge that timing gap between events. Now moving on to vehicle loans. BECU vehicle loans have no origination fee, loans up to 80% loan to value, repayment terms up to 72 months, and typical vehicle loans are for automobiles, small vans, and small trucks. Next, I'll discuss equipment loans. Equipment term loans, to be more specific, they also have no origination fee, loans up to 80% loan to value, and terms up to 84 months for repayment. Common equipment term loans will be used to finance business equipment such as a dump truck, a sprinter van, a box truck, a bus, etc. While this list shows some of the more common types of equipment that BEC will finance, types of equipment is actually that could be financed is actually quite broad. If your business uses equipment to move things, make things, or in general provide any business services, any kind of business service, it's very possible that it would qualify for equipment financing through BECU. And also, we do use partner with the SBA to provide equipment financing via the SBA 7A product. And finally, commercial real estate. BECU does a lot of commercial real estate lending. We offer low origination fees and competitive rates, very flexible terms to meet your needs. Terms up to 10 years, amortizations commonly 25 to 30 years, with or without a prepayment penalty. We do ground up construction financing, and also we do partner with the SBA for commercial real estate via the SBA 7A and 504 program. So now the really exciting slide. So BECU and Business Impact Northwest have partnered up for a scholarship. A really exciting opportunity to support. This is to support the growth of financially healthy, enduring businesses that help our region thrive, providing access to financial services for underserved entrepreneurs. This scholarship is for $100,000, up to $100,000 over the next 3 years. So 33% of that each year for BIPOC women and veteran-owned BECU business members. You have 2 course options. There's a Launch and Grow 7-week course, and also there's the longer course, the Grow and Thrive 12-week course. The scholarship application details are available at becu.org/businessimpactnw. And there is a process to self-identify as one of those qualifying the BIPOC veterans, women's, or BECU business member. So with that, that concludes my portion of the presentation. I'd like to remind folks that there's you can click on the questions tab below the video player to submit your questions for the panel.
Hello. We have a question from Michelle. What can I do if my credit score is low?
I know, Christine, you touched on your Business Impact Northwest has a program that is specifically designed to help business owners improve their credit score.
Exactly. Yeah. So we can look at your credit score, how low it is. Is that something that you potentially can correct in a short amount of time? And then if that's the case, the lender may put your, application on hold or, work with you while you're working with us. So it might not be something you can correct right away, but the sooner that you can look at your credit report and find out what your credit score is, the better. You don't want to wait until you actually need the funding. It might be too late at that point.
We have another question also from Michelle. Can I have both a Visa and a line of credit?
Yes, absolutely. That's actually a common structure. The line of credit provides a benefit in the form of something like an overdraft protection that a credit card wouldn't. So they're very complementary products. So it's definitely an option.
We have another question from a member. What if my lender asks for projections? Can you recommend a template that I can use to prepare them?
Yes, we have at the Loan Readiness Center, we have templates and we have advisors that can walk you through how to do that. So if your lender is requesting that and you don't have that prepared, we can help you with that.
A question from Lily. Do you offer corporation with employee cards?
So we have our business visa does have the functionality to set to provide individual cards to employees and set individual limits. It doesn't have the very robust purchasing card programs that some of the very large financial institutions might provide. So it's a very streamlined offering. But for the businesses that we've served, it has been a very effective for those purposes.
Another question from a member: is there a fee to establish a line of credit?
Uh, Not always is the answer. So it can be part of the structure and how the loan is priced. Um, there also there is commonly for smaller lines of credit, so maybe under $50,000, we do have an annual fee to maintain those. But if you get into larger dollar amounts for lines of credit, it becomes very custom, and then it may or may not apply. So it depends.
All right. I've heard that it's important to surround yourself with professionals as you grow your business. How do I go about finding a CPA or attorney that will be a good fit for my business?
Yeah, that's a great question. And yes, you do want to have a team around you, and that includes, yes, CPA, accountant, bookkeeper, includes perhaps a lawyer. That might be just a one-time thing that you need maybe to form some documents or look over contracts. A insurance broker, and then of course a lender. And you really want to establish a relationship with all of them, but especially your lender and your banker. They're going to really be a huge asset with your business. And so the best way I really recommend my clients to find that is to, number one, know what you're looking for, first of all. So what kind of services do you need? Do you need a full bookkeeping service, or can you do part of it yourself? Are you looking for a lender, or just a depository type of bank? What are you looking for? Ask yourself those questions first. And then the other thing is to ask your friends and family or other business owners, who do they recommend? That's often word of mouth is often a really good way of doing that. Or ask, if you do have a CPA, ask what lenders, bankers, lawyers, insurance brokers they work with and that they recommend. So those are some things you could start with.
What is the biggest challenge facing most new business owners when it comes to borrowing?
Well, I can give a perspective from the lender. Um, One of the things that, in my experience, has become one of the things that makes it most challenging to lend to a business is the quality of the financial information that's available. Is very important. You could very well have a very well established, very very profitable, very credit worthy business that BECU or other financial institutions would love to lend to. But if the quality of the information that you present to support that request is not doesn't support what you're asking for, then you're at a bit of a disadvantage, and you're being hindered by that quality of financial statement issue. That's one thing from my perspective that I really focus on.
Why would I be asked for a personal guarantee?
I can take that one too. So we there's it's a relation. We go into these borrowing relationships as a relationship, and we consider it a shared risk between the lender and the business. And for that reason, we want to have the business owner be a partner in that transaction with us. And for that reason, it's a sharing of the risk in the transaction. That's one of the primary reasons that a personal guarantee is applicable. Also, it offers secondary support to a lending request. Maybe the business is qualified, but to borrow it at a certain amount, um, but the but it's kind of on the fence of being something that qualifies. The personal guarantee could push that decision over the edge and say, yeah, now that we have the support of the owner in the form of their personal guarantee, now this is a viable lending option that maybe it wasn't without the guarantee.
All right, we have another question. What are the benefits of an SBA loan over a conventional loan?
I can cover that one as well. And Christine, if I miss any aspects of this, let me know. But the SBA has their lending programs will allow the guarantee that they provide to the lending facility allows the borrower to occasionally come in with a smaller down payment, um, which allows them to get into a loan with less capital up front. It also they may have maybe it's a loan request that doesn't quite fit the credit union's parameters or the lender's parameters. Maybe cash flow is just a little bit short of what the lender would typically provide, would consider acceptable. Um, the SBA guarantee, the SBA loan programs allow us to um, bridge that gap and extend the credit.
What are the benefits? Excuse me. What are some of the main reasons I would get denied a commercial loan for my business?
So there's a few big reasons that I could point to. One would be for smaller business loans, or for all business loans. We've talked about your personal credit score. We've statistically, it's very well known that business owners and their how well they run their business finances are fairly well correlated with how they manage personal finances. So we use that as a big indicator. Also, um, cash flow is ability to repay a loan was probably the primary reason why a loan may not get approved. And it's not just that, and it's not just you don't need to just qualify to be able to cover a loan payment, but you need to be able to cover all your expenses, your salary, all your loan payments, and probably still have a little bit of cash left over after all those are taken into consideration. And that's one of the primary reasons. And then maybe just asking for a loan that um, your current operations can't support. So
That was the final question we had for this session.